continued rise in the inflation rate in Malaysia has been attributed to bottlenecks in the supply chain and a shortage of labor. According to data from Trading Economics, which tracks macroeconomic statistics in markets around the world, the inflation rate has risen from 2.2% in April to 2.8% in June. In fact, Bank Islam Malaysia Berhad chief economist Afzal Nizam Abdul Rashid has already penciled in the rise in inflation given the upward trend in the consumer price index for food and non-alcoholic beverages. Afzal Nizam said the bottlenecks in the supply chain and the labor crunch could affect the efficiency and productivity of the economy. He said Bank Negara Malaysia had little choice but to raise the overnight policy rate to clamp down on demand-pulled inflation in order to avoid pressure on aggregate demand, leading to a further rise in inflation. He said there was also a need to watch out for unscrupulous practices such as hoarding, profiteering, and price manipulation that can exacerbate the price pressures as it requires multiple angles and better coordination in order to solve this problem. Sidik Jantan, Head of Wealth Research and Advisory at UOB Kay Hian, said that at 3.4%, the CPI had likely reached its peak and expected the rate to end the year at about 3%, although the food inflation will likely remain on the high side. Sidik said this was driven by a drop in oil prices. However, he pointed out that the moderation in freight costs would also alleviate Malaysia's inflationary pressure.